generally speaking, the stock market is now 15%.
The Wilshire Index has been a barometer for between for many years, 45, 50 years, and the Wilshire Index 5,000 takes 5,000 plus, but it's tagged at 5,000 companies as a whole, and that populates a figure of the capitalisation of those 5,000 today, August 24, of what those 5,000 in the United States are valued at. And then the denominator on that is that what is the gross domestic product, GDP. So right now, as of yesterday or last night when the market closed, the Wiltshire Index showed that the ratio per GDP is at 191, and that's shifted in a week by 1%, believe it or not. So fair value is 100, good buying is 70 to 80. The equity prices in the US now are 91% overvalued the GDP. So now the trick is, and the same ratio in Australia on the top ASX 200 is sitting today about 176. So our stock market's overvalued as well. Now the difficulty in that is that, if you state that and people sort of, well, things are overvalued, I won't buy at all. History says over the last 50 years that searching through the jungle and trying to work out, are they all overvalued? Well, they're not. It's a bit like going back, as I've said before, that 20 years ago, the market was held up by the four banks and BHP and Rio. I mean, they actually held up the index. In the last 5 years, that hasn't been the case. The index has been held up by largely technology, industrial real estate, banks, services, and money IT companies. So the trick with that is that history says 31%, between 30 and 31% of those companies that were caught up at the highest possible point, that was the beginning. So akin to that would have been, say, something like Amazon 20 years ago, where that peaked also with the bubble. The valuations now are higher than the tech bubble ratio. Certainly way surpassed the GFC. The tech bubble was insanity. And we're now higher than that per ratio per GDP. And we know what happened at the tech bubble. But they were companies that actually weren't making any money. They were just shoeboxes, or whatever they were, but they weren't making any money. Our website, a lot of them. But now we're in a market where there is general revenue, they are trading, and they have board, they have structures, and they're well capitalised. The trick in this is that which companies are the next Amazons that particularly in the technology space, that are about to take off. Then there's the lower, out of the 5,000 or the top 200, the bottom 10% are probably fair value. It's the middle and the top end that are grossly overvalued. So that's a good thing because there's companies in there that are reasonably valued. It's just that there's a lot of the larger companies now, larger capitalised companies, are extremely overvalued. And what happens is that the question is that what triggers a correction? What triggers this to adjust? And is it? I don't think the election date. I think that'll be baked into the price. I think that as we get closer to the election, there's some pretty shrewd forecasters, particularly institutional researchers, as they get closer. And I had bets on the previous election with Trump, did very well. This one here is a lot more difficult. That'll be baked into the price. You've got another, just last night before, the talk now of between 0.5 and 1% interest rate decrease in the US. Now, if that happens and we get a decrease of interest rates of anything between 0.5 to 0.75 to 1%, coupled with Trump's policy moving forward, I think you'll get support for Trump. The thing against him is going to be a numbers game against the numbers of people that vote for him. But getting back to the capitalisation, that's a real concern now, because a lot of people, and I said this the other week on a station, that if you called up a million people in their super funds or their 401k in the US, and you sent them this paper on this Wilshire 5000, and they could see, and it's evidence that Warren Buffett's been claiming, or George Soros, that they see that this index is overvalued. I've had 36 years, 37 years in this market. I'm saying that there'd be less than 5% that would take action to adjust their risk portfolio and say I should move to a more conservative portfolio. So if you rang up Uni Super today, or the Australian Super, one of the biggest super funds in the country, and said, knowing, I mean, how many people read that, how many people want to accept it, and how many people have taken action on it, I'd say that there'd be less than 5%, she'll be right, let's hang in there. Well, I think, so there is definitely an overvaluation on the markets. That's not to say that there's not, can Nvidia run to another 100%? Where can Facebook go? Where can Google go? A lot of these other tech companies. But it needs to be, because when you get a correction on the market, the big question is what triggers the correction? And but you can't take away, that's one of the reasons why, going back to Berkshire Hathaway, which I find very interesting and very just logic, that if there is a tax change, you're far better off to lock in the profits now, take the cash. You're far better off to be paying 21%, locking in an unbelievable profit, opposed to waking up one day, still holding the stock, and we're at a 32 or a 28% tax rate in the US. I don't think we'll see corporate rates here change. The country cannot afford it with 15.3 million taxpayers. The country can't afford a corporate rate. We need money down here. So we're in a market that's overvalued.